Okay, we're going to start talking here about posting columns, totals from a journal to a general ledger. And so we've been posting different individual entries to our multi-column journal. And now we're talking about taking what's in our special columns in particular and posting those to our ledger. So it kind of looks like this, all right? And the first thing we have to ask ourselves are, well, why are we posting the totals of our special columns? Again, when I say special columns, I mean sales credit, cash, debit, and credit. Why do we have to post those? Well, again, we've posted our individual transactions from our general debit and credit columns in our previous lessons here in chapter 4. Now we're posting column totals. And by the way, do we post the totals down here for general debit and credit? Well, of course not. That's why the check marks are down there. We've already done that, right? Okay. Remember that amounts of special amount columns are posted as part of the total of the amount columns. We'll get to that. And this posting totals process saves time, reduces errors, because only the total of many kinds of similar transactions, that being sales credit transactions, cash debit and credit transactions, are all being posted as one big batch rather than as individual entries. If we posted individual entries, we would run the risk of making an error somewhere. And all those entries we'd be recording, but also just be a waste of time too, right? Okay. So here we go. We're going to go through this process of posting our various columns. Of course, the first thing we need to make sure of is, do our debits equal our credits? We've got general debit credit, sales credit, cash debit credit. Now, if I was to come up here, I'd go, okay, in my mind, I would go, what is my debits? And I could write this out, use a calculator. I'm not going to do that. I've got debits of 57.48. I've got debits of 71.20. And if my math is correct, I've got 12,868 debits. 12,868. Remember that number. 5,748 plus 7,120. 12,868. Credits, 2525 plus 5820 is 8345. Doing math in my head. Do we still do math in our heads? I don't know. 8345 plus 4523 would be 10,868. Is that what I just told you? My other one was 12,868. Yes, that's correct. So they balance. 12,868 on the debit and on the credit. Just had to do that in my head. Okay. All right. Thanks for hanging with me on that. So check marks indicate that amounts are not posted individually. That'd be where we have, and we did this, I know, in one of my previous lessons, but sales credit and cash debit were both entered in special columns and it didn't actually get posted. Okay. Check marks indicate that general amount columns totals are not posted. So our special columns are not posted individually. Our total general and debit credit columns are not posted at all because we've already posted the individual transactions from the multi-column journal into the ledgers. Okay, so here we go, posting the total of the sales credit column, and we're going to stick with a very deliberate 5-step process. Okay, and I want to emphasize the importance of the last step in the posting process to show that you have actually posted the total of that column to the general ledger. And again, I have to say, yes, we would be doing this in electronic accounting software like QuickBooks, but it would actually look electronically like it looks on my screen here. QuickBooks kind of follows that same kind of format of the old general ledger accounting paper. At least the last version I worked with looked like that. Okay, so here we go. 5-step process. Go team. First step is we write the date. in our ledger area. January 31, the last date that we're posting this. Step 2, write the journal page number from our multi-column journal down to our post reference in our ledger, page 2. We always should be able to cross-reference or go back and forth. Step 3, write the column total. Our column total is 5820 sales credit. We're going to put that in the credit column in our ledger. All right. Step 4, write the new account balance. Now, in this case, we're assuming that this was our first month of operation in our accounting cycle, and we are recording sales for the first time. So we have a credit of 5820 and a new balance of credit 5820. Later on, we'll get into month-end close of expense and revenue accounts like sales into our various equity accounts. Hang on for that one. All right. Step 4. Well, there's step 4. Write the new account balance. I already said that. Step 5. Return to the journal here and write the account number, which is 410, in the bottom column underneath sales credit special column. Okay. 5-step process. Let's do another one. Posting the total of the cash debit column. Write the date. 5-step process again. Write the journal page number. Write the column total. Write the new account balance, 7120. Now, I got to believe that, didn't we? I guess, again, they were assuming at the very beginning the owner made I think he did. He made an advance he invested money in the company. So that was actually the very first cash transaction for the month. Again, we're assuming January was the very first month. So the new cash balance is 7120. We're assuming there was no bank activity historically before this month. Turn to the journal and write the account number 110. And then finally, we're going to do the cash credit column. Write the date. Write the journal page number. Write the column total. Now here we have a previous debit balance of 7120. We recorded a debit, which was an increase to cash, right? Well, obviously a credit to cash is going to be a reduction of cash. So we're going to take our previous debit balance of 7120, subtract the credit side entry or the reduction in cash going out the door, 4523. We end up with a new balance at the end of the month of cash of 2597. Now, in later chapters and lessons, we will talk about reconciling or matching up what is in our cash account with our bank account balance. That'll be fun. Step 5, return to the journal back here and put 110, our account number for cash, down under the special column for cash. Now, when it's all said and done, this is what page 2 of our journal looks like. Now, remember, we brought forward page 1 onto page 2. Okay, looking good. Again, notice the check marks down here for our general credit and debit totals not having to be posted. And everywhere where we just had entries in the special columns and nothing in the debit and credit areas. And here's our account numbers down here at the bottom of our special columns. So we're all done posting our multi-column journal to our general ledger. Now, these next couple of pages are really hard to see, obviously, but these would be all of our various individual general ledger pages. We've got cash up here, petty cash, our various asset accounts down to accounts payable, our capital accounts. We're going to get into income summary later. Here's sales that we recorded, advertising expense, stuff like that. Okay, so we have a multitude of different general ledger accounts which would match our chart of accounts. All right, that's after all of our posting has taken place. Now, if we were to go through the exercise of proving debits and credits, We could take all of our balances, take all of our debit balances, add them all up, take all of our credit balances, add them all up, and verify that debits equal credits. Okay. So, review of what we just talked about. Which column totals of a journal are posted? Pause. Well, the special ones are. Special amount columns. Let me go back to that. The special amount columns would be in our case, the sales credit and the cash debit and credit. Those three columns would be the ones that we are posting to the general ledger. Under what conditions will account balance be a debit? Well, I would say that when the previous debit balance exceeds whatever credit entry we make in that account, assuming we're talking about a normal balance. Whenever the debits in an account exceeds the credits, you're going to have an account balance of a debit. And if you want your assets to have a positive debit balance, right? If you end up with a credit balance and like in cash, a credit balance, you got problems. Okay. All right. Under what conditions would account balance be a credit? Well, it would be when the credit entries exceed what is in the debit columns. Your credits exceed your debits. You end up with a balance of a credit. And this should be your normal balances of liabilities and equity would generally have account balance of credits. Credits in account exceed the debits. Now, it gets confusing when we talk about expenses because expenses have a debit side balance, but they reduce owner's equity. You just have to keep going back to that. Okay. All righty, let's dive into, and you might need to pause here for a second, but we're going to dive into MindTap into lesson 4.3, working papers. I'm going to fire this up. Close that out. Fire up our work together 4.3 in MindTap. Okay. There is our chart of accounts up there. Omar Bourget owns a service business that uses the previous accounts. The separate account amounts in each line of the journal have already been posted down in here. Post the journal's special column totals. Make sure there's a post reference for each column total in the journal. Okay, now let's be good little accountants here. I'm going to drag this back over here and make sure we're following our 5-step process, right? So here we have our sales credit account. I guess the first thing I need to do is make sure I put check marks down here in my general debit and credit to show that those have all been posted. Okay. So sales credit. Let's follow our 5-step process here. So sales, I'm first of all going to write the date, which is April period 30, right? Now, I don't put anything in the item, okay? Nothing special there. So the next thing I want to say is post journal reference is page 1 for post reference. And I have a credit of 447 right there, my total in my sales credit column, 447. My new balance is going to be 447. Let's put the right number in there, Reardon. All right. That step, first of all, put the debit or credit balance in there. That was step 3. Step 4 is calculate the new balance. I kind of went through that one kind of fast, didn't I? Step 5 is to take your post reference from your general ledger, which in this case is account number 410, and put it back in the column 410, like so. Let's do that for cash debit. All right, we're going to come down here to cash, and we're going to say April 30. Step 1, write the date. Step 2, post reference is page 1. Step 3, debit amount $28.90. Step 4, new balance. We're assuming there hasn't been any account activity before. So we're taking a debit and making that our new debit balance. Step 5, write the general ledger number, 110, back underneath the column. Okay. Then we're going to post the sales credit. I'm just going to put 30 in here. We don't have to write April period again, because I don't think we do. Post reference 1, credit of 1170. That's step 3. Step 2 is the post reference. New balance. Well, I've got a debit of 2890. I have a credit of 1170. So doing that in my head, I now have a debit of 1720. Just kind of did that in my head. It's my new cash balance. Okay. Did I do everything that it asked me to do for this sample assignment? Yes, I did. Let's go back to directions. Okay. Oh, I forgot step 5, didn't I? Almost fell asleep there. Count number 110 underneath my column total to show that it's posted. I now have a completely posted multi-column journal, and I've posted all of those entries to my general ledger accounts. Are we ready to save and continue? I am. How did I do? I think I did good. All right. You'll continue on with 4.3 on your own and complete that. And that will do it for lesson 4.3. Thank you.